Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. And again, as always, happy Friday, everybody. Friday is the day we do our podcast. So it is always Friday here on the Real Estate Investing Club, bringing that Friday energy to you guys. I hope you're having a good day. I hope it is going fantastic. And it is a good day for another reason, because we have Maricela Sobranes with us on the podcast. They do my two favorite asset classes, mobile home parks and self-storage facilities. They also do multifamily, so I'm sure this is going to be a good one. Maricela is calling from the other side of the country down there in Florida, so a whole bunch of different time zones here. Maricela, thank you very much for hopping on the show.
For sure. Thank you, Gabe, for having me. Super excited to be a part of your community.
Absolutely. I told you right before we got on here, we always like starting with stories and hearing kind of how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us just how'd you get here?
Yes, for sure. So actually, I started in Austin, Texas with a duplex. I house hacked that duplex before knowing what that was, living in one side and renting the other side. And I saw the power of having a source of income that was not dependent on me going to work. And so I love that. And I figured, how can I duplicate this? So my mission then, that was in 2006. I figure if I can do one house a year and I can, build up for 20 years, I'll be set up for life. That was my way of thinking back then. So I then started transitioning into actually I went in the military in 2016. And I realized that I needed to educate myself on how to use real estate to build wealth. And I took a lot of time to there's really not communities like this or podcasts, and maybe I just didn't have that. Like the only podcast that I took with me, it was a bigger pockets, and so it was more like small deals. So, but it was very useful. It kind of taught me how to, just think outside your mind, little box. And then slowly I started growing the portfolio and when I came back, I grew it to 12 units, and less than 5 years. And so when I met my husband in 2017, and I told him what I was doing and what my goal was, and he said, "Okay, let's go." So we decided to start acquiring even more, and we wanted to do multifamily, just didn't know how to do it, how to take other people's money, and we just didn't feel comfortable. We were doing self-managed, and we were just extremely busy, still practicing. My primary job is I'm an anesthesia provider, and I was traveling across the country, so I couldn't really be there, and I had to manage my teams virtually. And my husband was stationed in San Diego active duty, so same thing. We couldn't really commit the time, so we decided to just use our own money and grow our portfolio. We grew it to 35 doors, and then something happened that shook our worlds. 2020, COVID. We have to take a hard look at what we were doing and if this was going to take us to where we wanted to go. And both being in the medical field, we got the biggest hit because, it's just like you are here one day and the other day you're not. And we saw a lot of health providers getting in a position that they never thought they would be, because they always felt like their job was a secure place or a secure income, and it wasn't. And so we decided to continue to do the real estate, but we wanted to scale it, and we wanted to have less liability because, again, all those loans were in our names. So we wanted to scale, less liability and less hands-on, because we're super busy. And that's what brought us into learning and educating ourselves into the multifamily.
Nice. 2020 hit a lot of people hard, and I'm sure a lot of people kind of had that wake up moment where they realized like, my job is not secure, and I need to have something that we can fall back on, that we can live on, and real estate is the perfect vehicle for that. So it's interesting. So you guys got up to 35 doors with your own money, which is great. Taking on other people's money, getting to the point where you're doing a syndication, where you're taking on JV partners, capital partners, that is a scary first step, because it's, I'm not that I want to, but I'm okay losing my own money, but I really do not want
Right.
to lose other people's money. So it's
Absolutely.
always scary doing that first syndication, that first deal where you're raising money and bringing other people money into it. Sounds like you guys did make that transition. Why don't you take us to that first deal that you syndicated, that you started bringing on external capital?
Yeah, so yeah, it actually was back to back. So we started selling our portfolio because we decided we wanted to scale. So we sold most of our portfolio in 2021 and 2022. And we immediately rolled that money into multifamily. So we invested passively in 9 deals back to back.
Hmm.
And that put us in a position of learning and paying attention, because when you pay attention, and our money was going away. And it was, a trusting and learning from the partners. And at the same time, we expressed how we wanted to be active eventually. So two of those partnerships, or two of those investments passively, resulted in a partnership. So we got into the first deal, and it was in Austin. So we're from Austin. We know the market, and we figure we can be boots on the ground. We can bring, the resources that we have, and actually we ended up raising capital, which we never saw ourselves as capital raisers, but we ended up raising capital for that deal and another deal that closed almost a month apart. And that was just super powerful. We learned so much through doing it. That's the only way you can do this kind of business. You have to do it. And we have some great partnerships during those two deals. And then it was, once that you get the first deal, it's like you start gaining that momentum. And we definitely, like, we're very purposeful. Then there was no going back. We had the time because we sold most of our portfolio, so we invested all of our time. And at the time, I lost my contract in the hospital, so I decided to I took 22 months off from the hospital, and that gave me the clarity and just being more involved, and not being like writing leases, more like building relations, learning, going to masterminds, and just putting ourselves in rooms that people were doing bigger things. And that's how we continue to get more deals. As of now, we have 12 or 13 syndications that we've done. We also done joint ventures,
Mm.
and we still buy with our own money. But yeah,
Nice.
that's
I
what we
love it.
are.
Yeah, I love that you guys, when you started, you made that decision. You wanted to go bigger. You wanted to do bigger deals. I really like that you got into a deal as an LP, as a passive investor. I wish I had done that, because watching, it would give you the opportunity to really see something go full cycle, to understand what the process looks like when you're taking other people's money, when you're doing bigger deals. So if you can find the right general partner to put money into their deals and then watch them as they run it, that I feel like that could be like one of the best ways to learn real estate, is just watching somebody by investing your own money in their project. So those
Absolutely.
first couple of deals that you invested in, was it somebody that you knew, or how did you get connected with these general partners?
Yeah, so one, we have been in a mastermind for a couple months, and they were doing the multifamily. That was their version of the real estate, and so we knew them from that mastermind. And again, it was like, hey guys, we want to invest. We have some capital. We eventually want to learn the business as well. So if you can give us, like, some more like the detailed reports, or let us be in some calls. And as an LP, you really can, but they took some time to extend. Like, we could get on calls, and we were able to kind of pick their brains. And the other one was one of the podcasts that I connected with, and I was doing the podcast and but managing virtual teams, and then he mentioned about a syndication, and I was like, you know what, we've been following each other for some time. Let me put some money, and that partnership resulted in two other partnerships. We bought a portfolio of 699 doors, and it's been a really great relationship. So absolutely, if you invest passively, be verbal and be intentional, and tell your sponsor, hey, I really want to learn this. And now what we do, we have helped 14 newcomers to do their first deal as a general partner. And we tell our investors, if you want to develop the skills, if you want to take your own deals, let us know, because we can mentor you to that. And so we've done that several times.
Nice. Yeah, taking other people on once you've already gone down that route, I feel like that is you're kind of giving back to the community. Obviously, you're making money as well, but that's
Right.
That is real estate. So yeah, the common theme that I'm kind of pulling from your story is that you're getting, it's the relationships that are really, making the difference. You had the relationships in the limited partners, you're developing relationships with the general partners that you're connecting with, and now you're investing in their deals, which is so important in real estate because you never know where a deal is going to come from, where a partner is going to come from, where an investor is going to come from. Everybody you meet might turn into something, which is just why, being genuinely interested in people and wanting to make friends and be a resource to people is so important in real estate.
Absolutely.
So you guys, you've done multifamily, but you also do self-storage mobile home parks. What
Yes.
kind of got you to fork off into that direction?
So what mainly the diversification. We didn't wanted to put all of our capital in one asset, although we love the depreciation, big chunks that we get from the apartments. We also saw the high cash flowing opportunities that mobile home parks and self-storage have. And as you know, the income to expense ratio and those assets are like less than, depending on how you run them, 35%, as compared to the multifamily makes less money, it's about 50 to 55%. So the model is the same. However, we like the cash flow and we wanted to balance that with the depreciation. So with the notes that we do, they're cash flowing every month, but we don't take any depreciation because they're just notes, paper, mortgages. So we offset all of it together. And so we get our cash flow, we get depreciation and appreciation. And my husband is qualified reps, real estate professional status. And so because of it, we're able to, offset the taxes for all that income.
Nice. I love it. So what does the next 5 years look like for you guys? What's your goals and what are you trying to achieve?
Thanks for asking. So because of that diversification that we ourselves have done, and like I told you, we don't preserve the cash flow appreciation and depreciation. Now we are open a fund where we welcome investors to invest their capital and come into the fund. It actually diversifies them across all those different assets, and they get their cash flow first monthly. So, everybody likes that. And then they also get the depreciation. Our goal is to bring more investors, more general partners, as well as limited partners, and to continue to educate other people. We are coaches for this specific area as well for business. And we spend a lot of time developing businesses so that they can increase their income and then they can invest with us or partner with us.
Awesome. I love it. All right. I'm going to take that opportunity and move us on to the quick question round. Are you ready?
Yes.
All right, let's do it. Starts with education. Could be any form, could be movies, could be books, could be podcasts, whatever. Give me 2 recommendations, one for general life wisdom and then one for real estate.
Okay. So Rocket Fuel is a book that talks about integrator and visionary. And if you have a partner that you work with or a significant other, especially, you have to understand how they work and what they spend their energy and time on. I'm a visionary. I'm always looking for the next deal, always looking for the next adventure. My husband is he's more cautious and very methodical and wants things organized. So if you find the perfect combination, you take off like rocket fuel. So that's the business really applies for any business. And the other one I will say is systemology, especially for a lot of business owners. They feel like they have to do it all. And as business owners, we need to delegate and empty your brain of things that are time consuming and no revenue producing. So that simple book is a 2-hour listen audiobook. It can transform your business.
And what was the name of that one again?
Systemology.
Systemology, right on.
Yeah.
Rocket Fuel. I've heard about that book and I really like the idea of it. They're talking about integrators and visionaries, and it's so important to have complementary skills in a partnership. Because if you have the same thing, I was in a partnership earlier, it went fine, but we were both kind of leaning towards the visionary side. And so we were both trying to fill the same role. We had different roles, within the partnership, but our orientation towards tasks was the same. And so if you have the 2 opposite opposing kind of styles, then they really mesh well. So I feel like that, that's a good book and a really good message to when you're starting up a partnership.
Absolutely. And for your team as well, understanding what your team brings or who you need in your team.
Exactly. All right, next question is for your younger self. Let's go back to the younger version of you who had just bought that first duplex back in, I think you said 2006. Go back to her, look her in the eye, give her one piece of advice moving forward.
Pay for mentorship, pay for a coach. Just invest in that education. It's going to collapse the time frame that will take you. It took me 15 years to get to the next level. Like it could have taken me if I knew, if I would have totally paid the amount of money I left on the table because I didn't even know. I just, people just don't know that other people can actually coach you and take you hand by hand, and it's okay to pay for it. Like totally. Now we pay. We are mastermind like junkies.
Yeah. It's crazy how quickly or how reduced the timeline can be, your education timeline, if you just go out there, get a mentor, get a coach, get somebody who's done what you want to do and go learn from them. You can read books, but it just doesn't translate the same. There doesn't have the same effect as actually getting in there and speaking with someone who's done it. So great advice. Moving on to the next question. This is about the US. It is a big place. There is tons of opportunity out there. Give me the single metro you're most excited about investing in today.
Texas.
Texas.
We have about
Massive
1,200
metro,
units
the
in
entire
Texas.
state.
Yeah, the whole Texas. We have about 1,200 units across Texas and 500 paths for the mobile home parks there. So definitely know it, and we feel comfortable. And just we want to buy it all.
Own Texas. I love it. Yeah, I'm bullish on Texas as well. All right. Next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So what's your favorite way to generate leads and find new deals?
Staying in contact with the community that is closing deals. So it can be maybe your friends are selling a deal and you can get it that way. Maybe the broker that you close deals with, or if you're new, just reach out to the brokers. Reach out to the brokers and stay in a community where people are doing deals.
Perfect. All right. Next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, most of the deals, there is some kind of wrench that's thrown into the mix, and we get to learn a lesson. So what was a deal that went a little bit sideways for you guys? And then what was the lesson you pulled from it?
Yeah, so a deal that went sideways, completely backwards, actually. So I will say the lesson learned from that is pick your partners, date them, ask like the hard questions that you should ask. Make sure that everybody has money in the deal. It doesn't matter how much like you have to be committed to the deal, and then just everybody has to pull the same direction. So the second that people are starting to pull a different direction, those are red flags, and you should be able to recognize them. And we're okay with walking away. Again, we're not here to lose money, but we'd rather lose our own money, even if we walk away from a partnership that we just knew that it wasn't going to work out. So we've done that twice.
Yeah. Yeah, I like how you put that. You all have to pull the same direction. I feel like that is an accurate way to look at it, because if people have different goals in mind, if they're kind of pulling in different directions, you won't get things done. And in fact, there's going to be a lot of friction. So make sure you guys are aligned when you get into new partnerships. All right. Second to last question is about money. It does take money to make money. Whoever said you can make money without having money is it's not in real estate. In real estate, it definitely takes money to make money. So raising capital is a central skill for everybody to learn. What is your favorite way to raise capital for your deals?
Well, I have a couple. First of all, you have to personalize the conversation. The book, oh gosh, I'll think about the name of the book.
Raising capital?
And no, actually, it's not. It's about the psychology of wealth. Understanding what drives people to create wealth. So if you're talking to an older generation, you need to address their pain. They have different issues, different pains, different ambitions. If you're raising capital from the younger, very successful young entrepreneur, and they have different priorities. So you have to speak their language. So you have to learn to communicate to the audience. And at the beginning, pick the audience that already knows you, because you look like him. you talk like them. Like in my case, my medical community, they already know me. Like I don't come back with, I wear my scrubs and my hat and everything. So immediately that layer of resistance is down. So find your perfect avatar that already knows you and go from there. And then you can diversify it and build more audiences. But at the beginning, you have to look like them. You have to meet them where they are, and then get to know their pains. You know their pains, and then fix them. And how do you fix them is how do you deliver your message.
Yeah. Yeah, that is so true, that you have to truly understand a person to really be able to address their particular needs. In the end, it is just raising money, but everybody wants to invest for different reasons. And so you have to be speaking in their language, in the way that they understand, to really motivate them to want to invest in your deals. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Awesome. So they can find me on Instagram. I am the Immigrant Millionaire, or you can just search my name. And in the link, you can find a free book that I wrote. I mean, I wrote it as an Amazon, but you can get it for free if you follow me there. And also, we have a wealth calculator, how much money you need to invest by when, and then it puts the number on how much you need to invest every year, depending on what your goals are. Those are calculations for free. And we often have events where we do answer questions, and virtual events we have every month. So all of that is in that link.
Cool. I will put Maricela's links in the show notes. So if you guys want to reach out, all you got to do is just click that little more in the description. It'll pull down the full description, and in there you can find her links. All right, Maricela, that was a great episode. Thank you very much for hopping on the show.
Awesome. Thanks for having me, Gabe.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a review on Apple or whatever you're listening to this on. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.